Hello investors, I am Jaafar Jameel, analyst of Golden Brokers, and today we will explore the growth driver of the big American McDonald's, the attractiveness of its popular stock and what it has in mind for its future. Before we dive into that, let's check out a brief history of McDonald's and how it became one of the most well-known brands in the world today. McDonald's is the world's largest restaurant chain by revenue, serving over 69 million customers daily in over 100 countries. McDonald's was founded in 1940 by Richard and Maurice McDonald. Then, in 1948, they established their first burger restaurant, which was modern service model of fast food. In 1954, businessman Ray Kroc discovered why small restaurants need a lots of milkshake machines. He then buys the right to franchise McDonald's restaurant across the country. After 1 year, he established his first franchise restaurant as the modern McDonald's we know today. Jumping to 10 years ahead to 1965. McDonald's launched its public stock. 2 years later, Kroc took over the position of CEO to himself after kicking out his partner. In the same decade, McDonald's opened its first international restaurant in Canada. But the real expand of the company started in 1990 as they opened its first franchise in Moscow after the Cold War, serving 30,000 Russian citizens in the first day of business. Then the company started aggressive growth and expansion. And by the end of 19th, McDonald's established over 11,000 restaurants outside US. Now, modern McDonald's prefer a low employee, high technology and self-services business model to cut down on costs, which is one of the main drivers of its notable success today. This explains the reason behind the global leadership of McDonald's in meantime and the large revenue they generate daily. So, let's see how successful the company really is based on its stock price growth. Looking at the stock growth from 5 years, it has driven up by 113%. 48% of that was in the past 3 years, around 9% since last year, 7.9% in last 6 months, and almost 2% since last month. This is a consistent stable growth, which portrays the strength of the multinational fast food giant. McDonald's show a strong earning per share of 32%. There is an estimation for the next 5 years expected to grow 16% per year. But how does the stock seem from a fundamental point of view? McDonald's profitability rate is quite excellent, with a profit margin of 31%. This is amongst the best return in the industry. Regarding health, the company has Trotsky F score of 8. This is a very good indication that the company is at great financial health, with very little risk of bankruptcy. On the dividend side, McDonald's has paid dividend in last 10 years and the company earnings are growing at a faster rate than its dividends, which makes dividend growth more sustainable. On the growth side, the company exhibits strong growth in EPS and revenue, but it's more recommended for long-term investment. Finally, regarding the valuation of the company, it's in line with the industry. In summary, the company is exhibiting strong and consistent growth and health, and is considered good buy for long-term investment and consistent growing dividends. Let's see how the McDonald's stock is performing from a technical perspective. The stock in the long term trend is strong and positive, while the short term is looking normal. Currently, as the S&P 500 index is trading at new highs, McDonald's is trading in the upper part of the 52 weeks range. When comparing the yearly performance of all stocks, McDonald's is a weak performer as 64% of all stocks are doing better. The stock is trading between the support zone ranging from $229 to $233 and a resistance zone from $243 to $248. As you can see in the chart, and there is a second support zone at 240, we recommended to put stop order to be placed at this mark. Now, we will take a look at the SWOT analysis of McDonald's, summarizing its strengths, weaknesses, opportunities, and threats. McDonald's is the ninth most valuable brand in the world, valued at $154 billion. Another strength is, of course, their French fries, which considered the best in America, according to Statista. Also, few people know that McDonald's has multi-billion real estate empire. Just think about it. McDonald's has thousands of great locations around the world for their restaurants, but also owns the land and operators as a landlord to make revenue through rent payment. Regarding its weaknesses, although McDonald's is considered the largest in its field, it is exposed to risk due to its giant network, such as mismanagement, dissatisfactions of customers and workers, and problems that happen in one of the branches may reflect negatively on the company's name. Not only that, but the McDonald's breakfast menu has been hit bad with declining sales, so they must do something about it to attract those who enjoy a fast, delicious, and cheap breakfast. One of the best features of McDonald's has been the value meals, which boosted their sales like no tomorrow. McDonald's can make use of the opportunity to introduce new innovative items on their menu to attract new customers rather than opt into new fast food outlets. One more opportunity is that while fast food industry are struggling to fight the image of junk food, McDonald's can play smart toward healthy and customized offerings to attract the niche segment of the market. On to the threats. New age fast food trends are booming, with McDonald's now considered as old school with its traditional menu and taste. Also, there are strong competitors in the fast food industry like Chick-fil-A, with threaten that customer attraction and retention aspects of McDonald's business. Not only that, but McDonald's is facing cultural threat while operating various countries, causing harm to the image of the brand. For example, the company faced quite a big scandal for using ingredients which were not halal in Muslim countries. To conclude today's video, we will take a look at McDonald's new growth strategy which the multinational is adopting for it to grow at a faster rate. McDonald's believe in committing to the core by continuing to focus on serving delicious burgers, chicken, and coffee, which represent the heart of their business. Such core classics are significant drivers for their growth. McDonald's also plans to maximize their marketing. The golden hours that represent the company are iconic because of what the company does in the world. And McDonald's want to maximize marketing by investing in a new culturally relevant approach to effectively communicate the story of its brand, food, and purpose. Another plan McDonald's has is doubling down on 3Ds, which are digital delivery and drive-through. McDonald's expects sales to reach 10 billion as they will launch the My McDonald's application to offer customers the fast and easy experience they love. This was the digital aspect. Let's move on to delivery. McDonald's plan to tap into more locations, expanding the number of restaurants that offer delivery ninefold to about 28,000 restaurants worldwide. The third and final day is the drive-through. McDonald's will maximize the advantages of its strong drive-through presence by testing new concepts and technology to make the customer experience even faster, which is one of McDonald's most successful selling points. Let us know in the comment below what you think will happen to the largest food chain known. Will it keep taking over the world? Or will competition beat the golden arts? This has been Jaafar Jameel from Golden Brokers and I hope you enjoyed the video. See you later.